Today, folks, as I'm sure you're well aware, our Prime Minister Justin Trudeau announced his resignation today, actually causing a rally in the Canadian stock market. If you guys woke up this morning, you probably saw the US market rallying on the back of a Canadian market that was pulling back right up to that 11 a.m. meeting where Trudeau stood up, announced his resignation, actually causing a rally that you could have traded, which was highly peculiar, very interesting that this is what the Canadian markets were celebrating. But I really want to dive into what Canadians are really celebrating, which is a peculiar rally going on in Toronto Dominion Bank, a rally going on in the telecom giant that is TELUS, because there's a stock market monkey like an angel and devil on my shoulder here saying, hey Kyle, now might be the actual bottom in some of these telecom giants, and there's some data that might be supporting it, and I may or may not take a position. I don't think it'd kill me to take a small position at this point, as I know so many of you guys love these stocks. And finally, I want to talk about the real estate market, because there's some really interesting data that's all over the place in different sectors of real estate that I think you should be aware of. So if you are on a path to financial independence, if you one day want to retire early, join me on that journey by simply hitting that subscribe button, because we're talking about VDY till I motherfucking die. VDY has been one of the best positionings I've made. I actually sold Tesla, several months ago, as many of you recall, when I had that massive bump, and I pivoted a lot of that money into VDY to watch VDY actually give me some pretty extensive short-term returns that were basically outpacing the S&P 500. It would have been better to leave it in Tesla, but I don't have that sleep easy at night comfort watching that volatility. But I am very sleep easy at night holding my VDY ETF. And even over the last 5 days, has actually been outpacing the S&P 500, which is super interesting. But if we look at the components that have been driving this, it's no real surprise. You take a look at the last 7 days, and it's the major mega cap stocks that have been doing this, with TD, one of the most suppressed companies in Canada, being the second largest company in Canada, actually starting to do exceptionally well. Enbridge doing exceptionally well here. We're starting to see a recovery in the telecom giants, and I really want to break this down because these are some of the upper weighted holdings that sit within VDY. If we zoom out over the last, let's say 180 days, the last 6 months, you can see those were the stocks that performed the best as well. With the exception of the telecom, Royal Bank and Enbridge, those two mega cap companies are of some of the largest holdings in the upper weights of VDY, and Enbridge purchased that US natural gas utility company, and Royal Bank purchased the Canadian counterpart of HSBC. Those two acquisitions really helped excel some of their growth, which led to that exceptional performance in the broader, VDY ETF. But let's zoom in a little bit, because now I think is time to shine when it comes to the most suppressed mega cap Canadian stocks like Toronto Dominion Bank. Now, this company underperformed and got wrecked. It's been a long time coming here. We're talking about a peak that happened in 2022, followed by just absolutely no return on the back of the rest of the Canadian banks performing exceptionally well because of their money laundering fine that hasn't come into play just yet, but there are some expectations they're going to get asset capped in the United States, can probably still grow in Canada, and they're going to have to pay a fine, which they already put billions of dollars aside for. And I think we're going to start seeing them have a great recovery in earnings, bottom line cash. Hopefully we're seeing the return of, less money being put toward loan loss provisions as we start seeing interest rates come down and hopefully loans start to stabilize. That's kind of the bet going on, is that's what we've seen with some of the other major banks, and Toronto Dominion Bank shouldn't be much of a difference to that exception. And I just want to point out that I like looking at the dividend yields as an indicator to if these are buying opportunities, because again, this is the second largest company in Canada. Maybe Shopify is getting close, I'm not sure, but you got to understand there's been no time in TD's history where we've seen a yield that has been this high. So kind of keep that in mind, right? Because most analysts, they're not really sure what exactly is going to go on with this company, but there's still some pretty high expectations for, that next quarterly posting coming up at the end of February, where I wouldn't be surprised if TD starts to beat it. Usually for the first and second quarter, they're pretty good at beating those analyst expectations as they have historically. So we need to see how the stock performs on that. But let's talk about the telecom giants, because I am honestly, I told you guys, the wife sold out. We sold it out to buy into VDY. She was the only one holding TELUS in our combined portfolios, and we did that months ago, quite a while ago. But I'm still sitting here thinking, with our concentrated portfolio, it doesn't really hurt to upperweight some of the lower cap weighted stocks in our ETFs just to inch out some more yield, because TELUS has dropped significantly more than where we sold it at. And look at Bell. Bell's up 2.5% since the beginning of the year. TELUS, is up 2.09%. So why are these stocks rallying? And I think it has a lot to do with the tax loss harvesters, because this massive dump that happened coming into the end of December, I would almost guarantee is coming from people that want to write this off against some of their capital gains. And I wouldn't be surprised if they start to buy it back once their month cycle turns over, probably coming up in the next week or two, right? And we're already starting to see that little bit of a rally, because I don't know if it's a hopium rally or what it is. I'm not a person that particularly wants to catch a falling knife. And I told you guys what you can pay attention to with this company is a return to cash flow, which is an indicator that we're starting to see now. So if we take a look, first and foremost, the dividend yield, the last time it was this high with this telecom giant was back during the dot-com era. And when it actually got up this high, that's when the stock actually bottomed before we started seeing the recovery. And something tells me we're seeing something very similar. I mean, we're talking about a 40 to 50% drop, I think, that has happened from peak to trough. So if we go all the way back here to where it peaked in 2022, we've seen a massive, massive correction here, guys. From once what was almost a $60 billion company, today is cut in half at a $30 billion price point. And if we take a look at the actual, expectations here, we're getting still some short interest. It'll be neat to see what that short interest looks like kind of coming into the following quarter once we get the next earnings. From a financial standpoint, things are largely unchanged. I mean, we're talking about very stable revenue still. Even on the quarterly basis, the last few quarters have been very, very stable. Gross profit has been very, very stable. Cash flows are starting to nominalize again. If we take a look at the quarterly cash flows, you can actually see where they had some major expenditures. The company laid off a massive amount of employees, which causes, obviously they have to pay severances. That comes out of the cash flow. A lot of impacts to the restructuring, that short-term pain for long-term gain. Are we going to start seeing it pay off? Well, it looks like it. I mean, we're starting to see that recovery in cash flow, right? And now we're getting the interest rate cuts that should also start to benefit, these kind of companies. So I'm very intrigued. I mean, we're talking about mega cap company. This company has $56 billion in assets, trading for $30 billion. Yes, they have a lot of liabilities. This is what's killing them on the interest expense, but that's going to start to get a lot better as they continue to cut rates this year. So I'm very excited to see what happens with TELUS, and you'll have to subscribe to see whether I buy it or not. I might just buy it as something to pay attention to for you guys, because I'm enthralled. I mean, it's not often that we go through, historical cycles like this. We missed the bank rally. For those of you that missed the big dip in the major banks, that's behind us. But these mega companies, they can be volatile through their history, but if there's ever a time to pay attention, now is potentially that time. Now, I want to talk about REITs specifically because there's a lot of different sectors to REITs. There's obviously the residential, there's the industrial sector, and I want to just kind of take a look at it, especially for those of you that might own homes. Like I own a condo here we bought last year. Probably not the most prudent time. Condo prices are coming down a bit, but let's take a look at the stats because they're highly peculiar and very unusual because firstly, total residential transactions are starting to recover. We're seeing more transactions year over year, which means, even seasonally adjusted, everything is starting to come back on the back of these lower interest rates, right? If we take a look at the year over year selling price on a house, it's actually hitting 1.1 million, which is insane. So we're starting to see a recovery now, which doesn't really bode well for somebody that's looking to buy a home anytime soon. I still think if you want to buy a home now is still the best possible time. You can always renegotiate the rate, your interest rate, but you can never renegotiate the price of the home you're paying for. And there's a lot of properties up for sale right now, right? If you take a look at total listings, we can see that even though the prices are going up with the sales, the year over year, there's still 6% higher amount of listings than there were prior, right? So if we look at days on the market too, even though there's homes are selling for higher values, they're still sitting on the market for a lot longer, which again is a sign of the times to be a buyer. It's a buyer's market right now, guys. So again, take advantage of that if you've been looking to get into the market. But if we scroll down, what I really want to take a look at here is some of the commercial stats. Firstly, with leasing, very interesting from a commercial standpoint because we're going to take a look at office and all that stuff. But we can see actually compared to last quarter, this time last year, leasing activities per square foot were up 34%. Very interesting. But if we look at the actual sales, they were down 32%. Doesn't really make a whole lot of sense to me. If you look at the average industrial rate, this was skyrocketing last year. Now, for some reason, it's coming down. And I don't know if that is because of the amount of industrial buildings that have been going up. If you drive down the 404 going from Toronto to Newmarket, you can see the industrial buildings that are going up like crazy. And I wonder what this means for a lot of the industrial REITs, right? But by commercial square foot for retail, again, very different from industrial to retail, right? Because retail was supposed to be dying. When we're talking about companies like RioCan, smart centers, etc. But they've seen a 68% increase in the square footage rental over last year, like a massive increase. So there's a lot of bullish sentiment that I think is building up for a recovery, perhaps in some of these mall-focused REITs. But if we take a look at office as well, guys, I mean, when you talk about office REITs that were like of the most hit that are still trading in the gutter, office REITs are seeing higher square foot per leasing, which a huge percent. We're not talking small numbers anymore here, guys. I mean, we're talking about growth numbers that you don't even see in the stock market for broad-based ETFs. So I don't know what's going on from industrial to commercial to office, but super interesting. Now, when it comes to condominium sales, I also found this very interesting. So firstly, total condo apartment sales are down 4.4%, even though I'm pretty sure the listings are up overall. The average selling prices decreased slightly. In full disclosure, I think we paid right around 700. It was like 696. Like we almost paid like basic market value for our current condo. If you take a look at total new listings, though, they're exploding. They're up 10%. And sales to new listing ratio is only down about 4%. But there's a lot of condos on the market, and they're becoming much more suppressed. So again, if you guys are looking for a place to live in the city and you have some capital built up after this explosive market, again, I still think that opportunity is there for you because the days on the market are still higher. So again, that gives you some negotiation tactics, right? But yeah, I just wanted to kind of abbreviate over these because I don't want to get too much into the rental side. If you want to look at condominium rentals, what we can see here is the actual price for rentals is coming down. That's better for inflation. And basically total apartment rentals are up. So there's a lot more, rental properties on the market with prices coming down because of that competition, right? So really great thing to see. Total new listings, however, kind of confused by this because they are down 31%. So that's kind of confusing. But like I said, we're in a very peculiar market, and I'd love to know what you think about this, how this affects your portfolio, how you feel about Trudeau stepping down to real estate. Are you buying the dips in some of these Canadian stocks? I'd love to hear about all of it in that comment section below.